Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it. And if you do, then just shout it loud and clear. I wanna know if you really need it. And if you do, then just shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear.
Hi, everybody. Good evening. All right, let's get started here. Good evening, ladies and gentlemen. Good to have you here. Another Sunday night. Sounds spectacular. Yes, it is. All right. I'm just kind of gearing everything up here and making sure everything is right. Okay, again, all these buttons to push. There we go. I think we got it all set to go. All right. I'm okay. Well, we're actually watching this cat. We're sitting here babysitting a cat. We've been doing this for a while now, and kids gone to university, and she's in college down in Texas, so she gives us her cat. We can't have a cat in residence, but anyway, the daughter, you know. So, but this cat is unbelievably friendly and needy, very needy. She always needs attention. She comes up on my desk, and I'm always throwing her off. She's here trying to get back on now. And anyway, she likes to watch TV, so I put her in front of TV there earlier, but I guess she's finished watching TV. Anyway, it doesn't matter. If you see me interrupted by a cat, you'll know what's going on. All right. All right, folks, let's get started here. We're broadcasting on YouTube Live. Let's hit the record button here.
Recording in
All right, good evening, everybody, and welcome to another edition of DayTradeSPY.com's weekly fireside chat, introduction to trading week in review. My name is Hugh. It is December the 14th. I know a lot of people are busy with family stuff and whatnot, and watching perhaps a football game or something. Let me just see, just out of curiosity, what is the score? I haven't had a chance to see my Buffalo Bills game today. What's going on here? Let me see here. My beloved Bills. Good. They beat New England Patriots 35-31. That makes me happy. Okay. Actually, I don't really care. I just say that. All right, folks. Let's get started. Good to have you all here this evening. I see a lot of people still joining us. And let me know the questions box. You'll find little questions box icon on your Zoom dashboard. Click on that and let me know. Let me where you are. Let me where you're located right here today. I want to see where a lot of people are watching us from here tonight. So just punch that up. Just curious. I see a lot of names here. A lot of familiar names. A lot of new names. A lot of names from our trading room. A lot of names from our inner circle. We had a great inner circle webinar Wednesday afternoon here. We did the Fed Reserve session. Oh, it was a long, extended session. I think a lot of people really enjoyed that and made some money too. All right, so Illinois, Quincy, Illinois, Toronto. Where's the cat? She's up on my. Is she up on my? You see her back here? She's up on top of my chair here. This cat, you'll see her. If I put the light, I can see her better. There you go. Can you see her there? There she is, little. Okay, if I go this way, maybe if I go this way, there she is. Anyway, she'll be crawling around here. You just watch. All right, there we go. I'll have to throw her off. Oh, she has to come up here. Okay. All right, Toronto, Smyrna Beach, Florida, Georgia, Cincinnati, Ohio, Asheville, North Carolina. Cold there too, huh? All right, Florida, visiting from Thailand. All right, Burlington, Connecticut, Houston, Florida, Maryland. Okay, Cat, you're done. Get off. I just threw her off. And I lost my share here, didn't I? Okay. Where did she go? Okay, I don't care where she went. She's gone. Okay, let's see. Can you believe this is going on? Seriously? Okay. Uh, share. I need to put the PowerPoint back up. Current slide. Okay, there we go. Wow, she's really messing me up here. Oh my Lord. Sorry about that, folks. This is not what you signed up for, right? All right. Herb from Dallas, Michael from Maryland, Twinsburg, Canton, Ohio, Florida, New York, Michigan. There's one from Wyoming. All right, pretty well all over the place. All over the place. Okay, Vancouver, British Columbia. All right, let's get moving here. Okay. So I have to show you this disclaimer just to keep us out of trouble, keep us on the right side of the law. Give you a couple of seconds to read it while I take a sip of my energy drink. Hmm. So I can stay awake. Had a long day today. All right, you alone responsible for all your own trading, folks, and past performance does not guarantee future results. All right, let's get started here. So, meet your hosts. My name is Hugh, and I am your guide here tonight. I see we're running solo again, once again, but um, folks, I learned how to trade here. If you're new on, I learned how to trade. Most of what I teach, I learned from the trenches. Although I did take a lot of courses back in the early days, most of it. I mean, I got some good stuff out of those courses, but really the good stuff is what I learned the hard way. And I learned that, and I teach that, and I trade what I teach, and I trade I teach what I trade, and I trade what I teach. All right, and I've been teaching internationally since 2010. We're now in our 16th year of doing this. I'm looking for short-term breakout trades for small, multiple daily gains, multiple times a day. It's been working very well for me. People took notice, and oh, I got it. The cat's angry at me. She's sitting there all mad. Her ears are back. Oh, I'm gonna pay for this one. I just can see it. Um, can you believe this? I know who runs the house. Um, so I was making some pretty good money, right? Making some pretty good money, and people started saying, "Oh, Hugh, what are you doing? You won a lottery or what?" I said, "No, no, no, just trading SPY." Well, show me. So they course me into putting it up on a website, and that was in 2010. Started with the inner circle, did some trading room stuff and courses and different things. And 3 years ago, I guess it was now 3 years. My gosh, that time sure flies. Eagle Financial Publications bought us out, hired us back, and they brought on John Johnson. He was retired actually from Eagle. He's one of the financial gurus who also retired. They brought him back. He's actually a litigation lawyer. But he gave that up to be able to trade. So he's a day trader as well, and a trainer. He's been highly acclaimed in many industry publications. His philosophy is very simple: take what the market gives you, and he's been doing very well. And he's a really amazing guy. Loves to teach. Loves to see other people do well, and we both share that same philosophy. All right, and that's what we do now. So, folks, we run the trading room together. So we're having a lot of fun doing it, and people are making money. They're learning things. I'll tell you more about that a little bit later on. So, if you haven't yet subscribed to Spy on the Markets, a weekly newsletter that goes out every Thursday, very brief, just a 3-minute read, if that. Shouldn't even take you that long. Very light, relevant, even entertaining. All you have to do to subscribe, go to our website, DayTradeSPY.com, and when the pop-up comes right in front of you there, just leave us your email address. That will get you a subscription to Spy on the Market. This week's topic is the very best holiday gift ideas. Excuse me. And I'll give you one hint as to what that could possibly be. But I will explain it to you in the newsletter. So watch for that. It's coming up this week, this Thursday. Now, if you don't want to subscribe, you can still go to our website. You can still go to our website, which is daytradespy.com. And hook up with us right here at the top left where it says Spy on the Market. Just click on that and just click on newsletters, and all the newsletters are listed right in there, and we go way back. I think we got about roughly 100 and I want to say about 115, 120, something like that newsletters right now that are out there. So it's very well received. All right. All right. So what are we going to talk about here tonight? We are going to talk about what happened recently. Excuse me, the upcoming week. Also going to discuss the 5 to 50,000 challenge. Answer your questions. That's why we are here. This is actually your night to ask questions. Your next steps and what you should do to get good at this. Got a little brief 2-minute tutorial, and then we got a little contest here, which we're going to give away an ebook. All right. Okay. Yeah. Ronnie says, "Oh, cute kitty." She's only cute when she wants to be, let me tell you. But she does have quite the personality, I will say that. So, um, I actually had a video. I was trying to upload it. I had trouble getting this thing uploaded from my cell phone. So we discovered that she actually likes to watch television, cartoons. Yeah, her favorite cartoons, Bluey, some of the Disney cartoons, Finding Nemo. Oh, I have a video. I don't dare show it. It was a YouTube. I know it's off topic, but it's a Sunday night. Okay, it's a Sunday night. You're not going to learn how to make $1 million in 2 weeks, starting with $500. All right, let's get that straight. It's just kind of a nice, easy sort of a social gathering, right? But I got to tell you, so we discovered this YouTube video. It was something about how your cat talks to you, or something with cats, something with cats. So we played this on TV, on YouTube, and our this cat that we're cat sitting got extremely excited, not in a good way. I don't know if she felt threatened or what it was, but we thought she's going to knock the TV over. She goes up there and she had this growl that we've never heard her before. Oh, she was angry. She was very angry at this, and she was up there whacking the TV, whacking these cats on the TV. She wanted these cats to go away. And then when they weren't moving, obviously off the TV, she goes in behind the TV to see where they are. And for a good day and a half after that, she was very agitated about this. So we agreed we're not going to ever show a video with cats on the monitor on the TV. So, but anyway, very interesting how they have emotions. They recognize things on TV for what they are, and if they can only speak English. It's, but this particular animal, she is very vocal, and she's very articulate in what she says. You know exactly what she wants. But anyway, if she comes up here, I don't think she will now because I kind of whacked her. Get off here. Anyway, let's move on, folks. All right, let's move on. So here's what the week was like. Let's just expand this. It was another very crazy week on the stock market. It seems like I've been saying that a lot these days, but on Monday we had investor nervousness that set in while they were waiting for the Fed decision on interest rates. They were still not all on the same page, the Fed members. But SPY did close lower after nearing a record high on Friday. We had 4 wins, 1 loss, 1 hold. On Tuesday, while investors were confident in a rate cut on Wednesday, there were less so on additional cuts next year. SPY stayed close to its lower range with 6 wins and 1 loss in our in our wheelhouse there. But anyway, what they were talking about is some of the descendants were talking about that they wanted more rate cuts, and one was I forgot who it was now. I don't want to say it out of line here, but I'm not sure who it was. One of them was actually pushing for a half a point drop this time. So that and a couple, two or three others wanted more cuts, later on. And anyway, they had the dot plot, which is a graph that they put on their projections going into the next 2 3 years. But anyway, we were waiting for the Fed announcement coming up on Wednesday. We had the Fed announcement at 2 o'clock, excuse me, followed by the conference call. SPY surged. After the Federal Reserve cut rates, S&P 500 just missed a record high, closing on that one. We ran up a good several points on that news, which was really pretty cool. We had 7 wins on that trade alone, but I think it was Oracle. I'm not really sure. I think it was Oracle that brought the market down. I don't know if it was on Wednesday or Oracle was Friday. I can't remember, but I think it was actually Wednesday. Oracle's post-market drop induced SPY to drop as well. And on Thursday, SPY regained a lot of that and went even higher actually to reach a record high of 691.24 in post-market trading here. We had 8 wins on Thursday, so things really recovered nicely off this this low section down in here. Some pretty cool, some pretty good support down here. Pre-market it went up, came down. All right, we got this little double bottom type activity here, and then the buyers came in. They woke up and they pushed it up higher, and the market actually closed 0.7% higher to regain the momentum. However, Friday was a different story. Excuse me, I'll cough. A lot of the tech-related stocks tanked as investors became wary of. Sorry, something's caught in my throat. Investors became wary of artificial intelligence bets, fueled by Broadcom's 11% tank, plunge, whatever you want to call it, and their future outlook. AI is a very volatile kind of a stock right now, very much in a bubble. And the first to go is going to be AI. The first to recover is going to be AI. A lot of investors are putting their money into AI, artificial intelligence. There's a lot of money going into AI, a lot of commitment. On Friday, we had 5 wins, 1 loss, 1 hold. A very exciting, not always a profitable week, but we managed to get through it. We're going to see what happens. From a seasonal standpoint, the blue line here at the top is where SPY is now, and the red line at the bottom is a composite of the last 5 years closing price on the daily chart. As we drill down into it, you'll see that historically SPY rose about 1 point over last week. And seasonally, SPY actually dropped about 5 points the following week. Well, something caught in my throat to the hiccups. That's a good way of going there, you. All right. So what happened here last week? Well, it was all about the Fed meeting, folks. It was all about the Feds. All right. They set the stage for broadening market gains, mostly on economic and policy outlook. The market actually built in already the cut rate cut, but it was the outlook that I think most investors and traders were looking at. And I don't think Fed Chair Powell disappointed anything in there. He said the Feds are going to remain responsive to labor market weakness. And I spelled weakness wrong. Let me get that corrected. I am I am a stickler for accuracy on stuff. And let me get this right here. Okay, weakness. There we go. Let's spell this right here. Fed committee remains optimistic that inflation is going to cool. They're heading down to their target of 2%. They are forecasting lower rates next year, possibly 1 or 2 cuts. They're going to keep an eye on the economy and the labor market, especially. They are concerned over the labor market. They want to protect against risks of a deeper deterioration of the labor market. And here's a look at the deceleration in the labor market. You're back, are you? Her name is Junie. Now I don't want you knocking anything over. Let me get rid of this cat here. Come on, you can't. Okay, I'll leave you here until you get into trouble. All right, you want to do that? All right. The labor market shows that What do we have here? The monthly change in ADP private employment and 3-month moving average continues to drop. So this is of concern to the um, to the feds, right? They need to prop this up a little bit here. Here's excuse me, look at changes in the equity markets. We see that the small cap and blue chip stocks clearly outperformed in recent weeks as large cap and tech peers take a breather. Nasdaq dropped. Magnificent Seven really dropped. Those are the high. The top 10 stocks in the S&P 500 make up about roughly about 40% of the capitalization. A lot of them are overvalued. So as soon as there's any negativism coming out at all, it comes out of the Magnificent Seven stocks first. And that's why you see a massive drop here in that one in the um, last 5 day period. The yellow bar is the 1 month. So even though they've moved up a little bit here, last week they really tanked. S&P 500 tanked a little bit over the last few days and the last month, but you'll see the Dow and the Russell 2000. All right, small mid caps, they've really gained here in the last little while. So I think what we're seeing now, we start to see the rebalancing of funds into into the small caps. So what fund managers are doing is saying, you know what, the Apples and Amazons of the world, the Magnificent Seven of the world, they made their gains this year. It's time to take them out of those stocks and put them into other stocks. And they are finding opportunities in the lower to mid cap stocks, and that's why the Russell uh, shot up pretty good, almost 5% there in the last month. And a good week as well. You can see the S&P dropped 0.6% this last week. Year to date, they're still hovering around 16.1%. Not bad. The Nasdaq is up 20.1% year to date, and the Dow is up 13.9% year to date. So, what's going on here? Looking into next week, folks, looking into next week, we've got the Empire State Manufacturing Index on Monday, also known as the New York State Manufacturing Index. On Tuesday, excuse me, a busy week on Tuesday, ADP weekly employment change. We've got other employment data coming up on Tuesday. Let me pull up what we have on Tuesday. Let me just take a look here. Tuesday. Okay, let's see. On Tuesday, there's actually a um, string of employment numbers, I believe, on Tuesday. We have non-farm employment change, the employment rate, average hourly earnings, ADP weekly employment change. See a lot of employment numbers coming up on Tuesday, along with retail sales numbers, the S&P Global Flash Manufacturing, and also the S&P Global Flash Services PMI reports are going to be released on Tuesday. Not a whole lot on Wednesday. Pretty quiet day on Wednesday. Unemployment claims coming up on Thursday and consumer price index, along with the Philly Fed manufacturing index. These are pretty important numbers. On Friday, we've got existing home sales, consumer sentiment report, and an inflation expectations report on Friday. These are revised University of Michigan uh, reports regarding consumer sentiment and inflation expectations. All right, so how's the volatility? Well, we are looking at moderate on Monday, high on Tuesday. And what I want to do there is fix this here. I need a space between the high and the Tuesday. There we go. Low on Wednesday, high on Thursday, moderate on Friday. And we have to take a space out of that one. Keep an eye on when President Trump speaks. Volatility tends to move whenever he's in front of the podium. Give him a microphone and no telling what's going to happen. Markets go up, they go down. It's been pretty crazy these days. Actually, it's been kind of quiet, hasn't it? I don't think he's said a whole lot this last week, but we'll see what happens. So we're going to keep an eye on this and hopefully try to make a few bucks. All right, let's move on to many opportunities every day, folks. We show you how to spot them. And there it is. Where, come on. We show you how to spot them and how to trade them. I try to coordinate this PowerPoint, make this thing really work. It's not always easy, as you can see. I like this little snowman here, little guy here in the snow. Yeah, we're under some pretty frigid weather down here, up in here. I shouldn't say down here, up in Western New York. That's why I asked you guys earlier where you're from because all you guys down south, I'm a little jealous. As you can tell, I think we're going to be planning our Florida trip pretty soon. Anyway, folks, our 5 to 50K challenge. All right, we're going to be doing this starting in January. Our goal is to produce. We're going to try and keep it as simple as possible this year, right? Coming up here, we're looking at making just $200 a day in gains, and we want to reach our $50,000 by the end of the year. We're going to try and take it easy. Start with $5,000, following our procedures. It's all going to be done in the trading room, and you must be in the trading room to trade this program. All right, we're not going to be sending you the signals, right? We're not going to be giving you the things because, frankly, by the time we send them, you receive them and act on them. That trade could be well done. Okay, these moves are fast, and we're focusing on our trades in the trading room. So you can imagine that we can't be, sending them out on through through text or email or whatever. So you have to be in the trading room to trade this program. I highly urge you to do that. Actually, you should join in as soon as you can so you fully understand what we are doing. Right? Because there are going to be some rules here. We've got some rules. We've got to start with $5,000. Only trade profits as they settle, which is the next day. Going to use a cash account, so pattern day trade rules do not apply. Buy first, then sell, calls and puts using our standard setups. There'll be no spreads. There'll be no naked trading, nothing like that. And we're going to track this on a daily spreadsheet that we're going to show you. All our activities are going to be reported in the Inner Circle follow-up report. We're going to record the gains and losses net of commission. Commission being $1 a contract because that's what it is on Tasty Trade. $1 a contract up to a maximum of $10. Costs $1 to open a position, 0 to close, and up to a maximum of $10, which is actually really cool. So if you're trading 100 contracts, guess what it costs you? Only $10. So our goal is to hit $50,000 by December the 31st, 2026. Think you can do it, folks? A lot of people have. And the idea here is to start with safer trades further out, expiration at the money expirations, right? Look for modest gains. Build up the buffer. That's what you got to do. Build up the buffer first. That way, you'll have a little bit of a buffer, right? In case you have a bad day. We're not going to be too aggressive. Might get a little more aggressive later on in the program, but right now we're going to start out small and just kind of go on in a nice, easy way. And then as you get more confidence and more understanding of the program, then we can maybe inject a little more capital into those trades. I have every reason to believe this is going to work, and this is not a 5 to, it is a 5 to 50. Where did that come from? All right, I want to make sure I get this right here. Okay, let's go back to this other one here. All right, 5 to 50. There we go. Yeah. All right, 5 to 50K challenge. There we go. Okay. Folks, the trading room. You hear us talking a lot about the trading room, right? Just so you know, we do have other programs, and I'll tell you about those too. All right. Let me ask you. Well, let me get into the trading room program first. Then I'm going to ask you a question here, folks. I'm going to ask, and the questions box is open. I'll get to the questions a little bit here. All right. The trading room. This is where pro traders, myself along with John Johnson, we get together every morning. This is where strategies come alive, folks. Our strategies come alive every morning, 9:20 Eastern time, and we go till 10:30. Now we have been going a little bit over time. But this is actually really funny. So the cat is actually watching me on the screen. She's looking at me and she's looking at me and say, "Hey, how did you get on that TV?" She's actually very confused. So she just might start growling, and if she's you'll hear her growl if that's the case. I might have to deal with this animal. gotta tell you, if she could only talk. I think she does speak, but she speaks in human language or cat language. Folks, our strategies. We have several little strategies that we use. All right, I'm not gonna kid you. All right, we look over the generally we look for the breakout trades. We look for. I just wish I could get a video of this. She's going back and forth with me. Breakout trades. We've got our OMG, which is short for out of the morning gate. Our bread and butter trades. And yeah, I mean, it's been working very well. We're not 100%. I'm not going to kid you, it has been a struggle. And as a matter of fact, I'm still holding calls from Friday, but I'm pretty confident things are going to improve a little bit here. But you're going to learn and earn from the best. The trading room is an interactive session, exciting trading. So imagine that you're actually trading along with two pro traders. You can actually ask them questions and get real time, real live answers. I mean, how cool is that? Um, I can't imagine anywhere else where you can get this kind of service, especially for as little money as this is. I really wish, when I think about this, I really wish I had a Hugh back in the days when I was learning this stuff. Because when I go back in those days, I wonder, how did I possibly make any money back in those days? Was it by accident? Was it beginner's luck? Was the market different? Did I actually know something? I shake my head and I shudder to think how I survived those days, but I did. It's like anything else. You do something long enough, you're, believe it or not, going to get good at it. And this is what you're going to do. You're going to learn and earn, all right? We teach what we trade what we teach. So we're not giving you a whole bunch of, theoretical stuff that you're just going to, or books or something you're going to just, pile away somewhere and never use. What we teach you is what we do ourselves in the trading room. We fully narrate our positions. What we do is we get into our trades. We explain what we are looking to do. Now, this is actually really hilarious. Oh my gosh, she is unbelievably mesmerized by my image on the screen, and now she's looking at me and wondering how does this happen? Oh wow. Anyway, watch us make real trades, folks. Get your questions answered. We use real trades, real setups, real money. We also use sim account. We have to show you by law. We have to show you your sim account, but we also trade real money. Okay. And now she's trying to touch me on the screen. Yes, Junie, I'm here. All right. Questions, you get them answered in real time. We've got the longest running trading room that we know of, folks, since 2010. And you're going to see our 5 to 50K challenge in 1 year on that in the trading room. All right. We have a special price. Special introductory price for $6.99 per quarter for the first quarter. Now, I don't know about you, but I cannot afford not to be in the trading room when I see this. As a matter of fact, if I had something else to do every morning between 9:20 and 10:30, I would defer it. If I had to take the kids to school, I would call for a limousine. Okay. If I had a job to go to, I would say, I am not coming in until after the trading room. Or if I am in, I have to do the trading room. All right. Believe me, it is well worth it. It works out to roughly half a Subway sandwich a day. And it really is well worth the cost, folks. All right. What else can we talk about? Well, I'm going to talk to you about what are we talking about? Okay. Take your questions. Let's take your questions. I want to tell you we also have the pick of the day, Day Trade Spy Signal. We also have the Inner Circle. These are all programs that we have. Tonight I was just talking to you about the trading room, but we have these other programs as well in case you are not able to be in the trading room, but you would like to, all right, actually get into a trade that we pick for you. We pick for you. All right, let's get to some of the questions here. All right, Mark has asked a question. When I look at an option chart on Thinkorswim, it shows two lines. What are they? Which do I go by to see the price? Example, Dot SPY 2512119C690. I don't know what two lines you are looking at, John. Sorry, Mark. I don't know what two lines you are looking at. Here is maybe you can expand on that exactly what you have to be a little more specific here. There are actually a lot of lines here that are being presented, and I don't know what you're referring to here. I've got the calls on the left, puts on the right. If you, let's say you want to enter a position, you would click on the ask price here. It comes up in the line underneath here. The green bar is a buy order. If you are looking to sell something, you could either click on the opposite, create an opposite order, which will give you a red bar at the bottom. That is a sell order. Or if you want to sell something off the charts, you would click on the bid price. You will have this red bar come up as right as your sell. All right. So I'm not really sure. Maybe you can. Oh, on the chart, he's saying on the chart, the options price itself. Uh, okay. I don't really want to get into the charts here because again, this is not the place for that. We'll talk about that in the trading room, or if you are in the inner circle, bring that up, Mark, on a Wednesday night session. And I'm not sure what you're looking at there, but I don't want to get too deep into the actual instructions on how to place trades tonight on Thinkorswim or any other program, because this is a general webinar to bring you into our training programs. All right. So let's get into some other questions here. For the 50,000 challenges, the goal to make $200 per day in a single trade or per day with several trades. Good question, Lauren. The idea is that we are starting with $5,000 as if it were a cash account. So in other words, we are starting with 5,000, and if let's say the first day we have $5,200, then the next day we could be trading up to $5,200. Okay. If the second day we make $500, then after that $500 profit settles the third day, we will have $5,700 with which to trade. So we're going to be moving that up. Now, I don't know if it's going to be on a single trade or maybe multiple trades, but we can only trade up to whatever we have in our cash account. Okay. Now, in reality, I have a margin account so I can go in and out as much as I want. But we found that the last time we did it, a lot of people did not have margin accounts. So we're just going to be trying to take it sort of an easier step that way um, where we are trying to facilitate as many people as possible. Kind of a nice, easy way of making $50,000 a year, starting with 5,000. And there's no shame in making 10 times your money. Okay. So I think you're going to really enjoy that. Um, and we're really trying to, as I mentioned, facilitate as many people as possible. But you have to be in the trading room to do that. Okay, that's what we're going to do this. So now we may not trade every day. Some days we might make $300-$400. Other days we might make 100 or 150. A lot depends on the market. Not every day is going to be a good trading day, and there are going to be other days that are going to be just fantastic trading days. I'm not suggesting that every trade is going to be a scalp. We might have a little more swing or position trading one day and scalps the next. But the idea is that we are going to be doing this in the trading room using all the tools that we have. We might use an ONG trade or a bread and butter trade. We don't know yet. Okay, so we'll see what happens. So anyway, looking forward to having you in there. Excuse me. Okay, Derek, you're with me on holding calls from Friday. So am I, buddy. And question, how high do I expect SPY to go next week? Oh, how high do I expect SPY to go next week? Let me see. Well, we have some news coming out next week, some inflationary news. If the inflation is under control, that's good for a possible further cut in January. We'll see if the Feds are leaning towards a cut in January. My guess is they're probably going to hold on and just wait and see how the interest rate cut works out now that they just had done. But I don't know. Let's take a look at the just let's look at the futures are all up right now. The S&P is up almost 15 points. We've got the Nasdaq up 37, 38, 110 for the Dow. Oil and gold are also both up right now. Let's just look at the chart real quick here. The daily chart. Okay, I just want to see one chart here. Actually, I'll just pull off some of these other lines here. I'm going to get rid of all these things here. I just want to look at one chart real quick here. Applying OK. And let me just pull up here where we were. Excuse me here. This is not SPY. I want to go to SPY with my eye. All right, daily chart, 5 minute chart. Let's look at an hourly chart. Well, look at we cleared the path to the 691.24 here on Thursday, just after the market closed. We came down to this level. It looks like we are, we're climbing already pretty good here in pre-market here right now tonight. If this continues, now here's the thing, right? I think you're gonna like this. Anybody holding calls, pay attention. Um, because here's the thing. Whenever the stock, this is what I noticed, whenever the stock goes down very quickly, like it did here, um, okay, you often get a fairly quick move back to the upside. Take a look what happened here. Was this Thursday? Thursday, you had a very quick move to the downside in post-market trading. Oracle, Oracle brought us down, but we did manage to rise nicely here. All right, we did once we broke some resistance, we did clear the path quite nicely back to the upside. As a matter of fact, we hit new record highs. You wouldn't have thought that right here early Thursday or Friday morning or Thursday morning. Now with this big move to the downside, I mean, my goodness, we lost, oh, it's a 687, 688 down to 680. We lost about what, 7, 8 points here in post-market trading. But from 680 all the way to 691, there's an 11-point rise one day. That's huge. That's huge on SPY. Now, we also did tank here. I'm not going to kid you. We went down from, what's that, 689 and a half down to 679. We dropped 10 points here on Friday. But it does look like SPY does want to edge higher, so we will keep an eye on it. And now I see the futures are 14 and a quarter, 36 to 107. This can change in a heartbeat. We'll keep an eye on things. If there's nothing to block the move back to the upside here, I could see this heading up nicely back into this range here before too long. When I say this range, I'm talking about this block right up in here. Okay. Once we get into that range in there, if you're sitting in calls, don't get stupid. Try and get rid of them. Try and unload them. All right. Try and unload them. All right. Just do yourself a favor and then look for the next trade. At least that's what I like to do. I don't, obviously, I would have to look and see, is this still a viable trade? Are we still moving to the upside? What's going on? So, um, all right. Let's see. List appeared before the option name. Not really sure here. In the inner circle, I'll bring it up then. No problem. Thanks. Okay, so yes, sure, Mark, no problem. So, is there a reason you get weekly options as opposed to ODT options when you're only planning on trading intraday setups? Absolutely. Also, do you get in the money, out the money, out of the money options for your trades? I like to trade, Alex. I like to trade at the money options. I find that's the best balance between risk and reward. And the question is, why don't I trade 0 date expiration if I'm only trying to be in and out of there the same day? The answer to that is very simple. The theta loss is much lower on options expiring a few days out as opposed to options expiring today. If you are in an option that expires today, you will see the theta loss which is the value that it loses just because it exists. Okay. It goes down very quickly. And the longer you hold these, the faster it goes down. Um, the plan is to get in and out of them the same day. Absolutely 100% it is. But if you find that the stock suddenly moves against you, let me just pull this up again just to kind of show you. And let me take a look and see if I can change this into say just even a 1 minute chart here. All right, let me get rid of this here. Okay, let me get rid of this too. Okay. If you're sitting in a call option and now the market's coming down, it's coming down, it's coming down, right? It's coming down. And even something like this quick drop could be faster than you can get out of it. What I'm saying is, let's say it's getting out of it. Let's say you have a stop loss here, okay? I don't like using stop losses, but let's say in your situation, you're looking to get out of it with a stop loss. And okay, it hit down here somewhere. Okay, you say, oh, you know what? I got to bail out of it. So you put your order into sell. Well, it's not going to sell for your stop. It's going to sell for less than your stop because it's coming down so fast. It's coming down so fast. Now it gets down to this point here. It gets down to this point. So let's say you took a bath right here, right? You took a bath right here. Now you're watching the stock going back up, quite possibly even recovering a lot, if not all of that loss you just suffered over here. Now you're kicking yourself. So you lost in two ways. You lost financially. Now emotionally you're getting beat up too, right? You're watching this, but you keep watching it. And then it reverses and continues to go back down. And even if you're holding here, anywhere in here, the option is going to go down so much in value. If your stop is say 10 cents off a certain price, you might be out of this with a 20 or 30 or 50-cent loss by the time you actually sell it. It's just going down way too fast. It's not drifting, it's actually moving down fast. Usually I find that when it moves fast like this in one direction, it's going to at some point quickly reverse and go back up too. Now, of course, it's all relative. We did drop real fast here on Friday. We did start to come back up pretty good. All right, we did level off again, another big dip here at the end of the day, came back up to level off here. We did recover some of the loss here on Friday. Looks like we're heading back up here now in pre-market, post-market activity now. But because it did come down here, yes, I expect the stock to come, to work its way back up. How far up right now, I don't know. Depends on the. But if I duplicate this and move it over here somewhere, I guess I have to do it this way, right? Activate regression line. If I move it up here, oh, I see I'm not doing it right. Okay, I got to clear this one here. Sorry, I'm trying to get rid of this line here. Okay, remove drawing. Because we came down so fast there, all right, we could probably see a fairly quick move back up, into that range, all right? But here's the thing. When you have a zero date expiration, that option loses value very, very quickly. And let's say you get to the same level. Let's look at something here as an example. I'm going to clear this off here. I'm going to just kind of show you something here. If, for example, you bought an option over here, all right, at this level right here, okay, and you paid, and I'm just pulling out a random number. But let's say you paid, well, we'll do a real example. Let's do a real example. Let's say over here you bought a 684 call option. That's a brilliant idea. 684 call option. Let's do it this way here. Okay, 684. This is actually going to be a very good exercise. 684 call option. Okay, I want to change this to say blue. Okay, so here you go. SPY 25. This is Friday, right? 25, 12, 12 call. What did I say? 684, right? 684. Okay, what is it that we got? What happened here? This is a daily chart. Okay, first of all, I need a minute chart. Minute chart. Okay, that's a put option, a call option. Okay, what did I do wrong here? Period SPY 25. Here it is right here. Okay, here it is right here. This is a chart on the right side here. This is a chart of a call option. 684 call option for the same day expiration, December the 12th, right? So right over here on the left chart at 10:30, 10:31, excuse me, 10:30, 10:31, we bought a call option. Let's see what the price would have been around 10:30, 10:31. We'll give you the benefit of the doubt. Let's say we paid it out on average of a dollar, say $1.70, right? $1.70. Let me get this line here. Okay. Actually, what I want to do, I want to get rid of this crazy volume chart down here too. Give me a second here to option chart. Okay, there. I'm trying to clean up the chart. So here it is at 10:31. 10:31. What did we pay for these call options at 10:31? We paid roughly, say, and I say like it's $1.70. Let's say $1.70 for the same day options, right? All right, same day options at dollar at 10:31. Okay, so it went down, and let's say you're weathering the storm here. You say, no, it's going to come back up, and it does. And right over here at what are we talking about here? Say 112, 113, 113, even 130-ish, 113, 130. Let's take a look what happened to the option. What did I say? 113, 113. Well, let's just pull this up like this here, right? Easier. 113. Well, I don't have to tell you that we didn't come anywhere near, right? We didn't come anywhere near what we paid for it, right? We paid $1.70 for it. It hit a high of dollar 19, $1.20. We lost roughly 50 cents in time value waiting for that stock to come back. That's a so to make up for that loss, to make up for that loss, you would have to have, oh, let's say the delta is 50. A 50-cent loss, 50 divided by zero point 0.5 is $1. For the time loss alone on the stock would have to move up $1 between right here 10, what was it, 10:30? Sorry, 10, about 10:30-ish, whenever we got into it. And the move back here in the afternoon at about 1:13. We would have needed the stock to move $1 just to make up for the theta loss. That is the problem with zero date expirations. Now, if we bought the same option with, say, well, let's say next Friday, which is the 19th, we're still in a bad spot. Let me just get rid of that crazy thing in here too. Let me just take a look here. Settings, get rid of the theoretical price. There we go. So if we bought at 113 or whatever it was, sorry, 1013, 1013, is that the same option here? Is this, I'm not sure if it's the same one or not here. I think so. If we bought at 1013, we would have paid, say, $5.70, and at what do we say, 115? 115. We're up here, let's say 116, 115. Let's just say 445. Okay, so there's still a differential. There's still a massive differential, but we have lots of time on our side. We have lots of time, and the time is the thing that we're worried about. Okay, we have time for this to come back into its trade and make up for the time that is lost. That is the reason why I like to have more time on my side. So I'm not pressed for that stress on the zero date expiration. And you know as well as I do that when you're in a bad trade, that 4 o'clock bell comes up real fast. I would rather be down some money with time on my side to make up for it than to have such a loss that I'll never recover from it, and it's basically a complete washout at the end of the day. So that is the reason. And now the thing is, it does cost more money. You'll buy fewer options, but it doesn't matter because when you sell it, you'll get that money back anyway. All right, you will get that money back anyway. So, all right. So I historically wanted to see the trace price of the option. How do you get the option price up here? Here's how you do the option price up in the symbol area. You start, this is for SPY, so you start with the period and then you put the symbol, in this case it's SPY, then the expiration date, starting with the year 25 and the month, 12th month is December, in this case the day, the 19th, then C for a call, P for a put, and the strike price. So that's what you would put up in the symbol. A period, symbol name, expiration starting with the year, month, day, C for calls, P for puts, and the strike price. Okay, that's how you do that. All right, Lauren. Okay, so I missed the last challenge. Join toward the end of it. You can tell the people that I love the trading room and highly recommend it. Thank you for that, Lauren. Lauren says loves the trading room. Highly recommend it. So yeah, I just told him. Okay, all right. Okay, Alex. John's not on, but if you can send me that email, Alex, about something that came from somewhere about the 10 to 75K challenge, I'd like to see it. I had not seen that. Send me the email, hugh at daytradespy.com. That's HUGHG at daytradespy.com. Okay, question here. How much do you need to trade with out of the 5,000 that you trade with? All right, so let's say we have $5,000. I'll probably trade. Well, let's say an option costs $3. I might trade anywhere between 5 and 10 contracts, depending on how much confidence I have in the move. Okay. Usually early in the morning, I can develop a very good feel as to which way the market's going to go in the next little while. If I have the confidence in the trade, I might trade, um, 10 contracts if it's $3 a contract. I'm probably not going to trade the entire 5,000. So I want to build up the cushion. And then maybe once I have 6 or 7,000, I might go a little bit further up, maybe trade 4 or 5,000. I still want to keep some kind of a cushion in there because I don't want to blow up the account in case something horrible should happen and somebody says something or something happens and the whole program goes south. So I don't want to do that. So, all right. Okay, John McKay says, hi. All my family and friends know that I am not available from 9:20 a.m. until 10:30 or so because I am dialed into you and John helping our future. Thank you for that, John. That is awesome. Yeah, I made the mistake 2 years ago. Somebody walks in, I get distracted, and or I'm on the phone or something happens. I got to tell you, I made everybody aware that when I'm in the trading room, do not come into my office. All right, do not come into my office. You can only come in if there's a fire, and only then when the flames are 4 feet high. Okay. So I made it very clear that when I'm trading, I'm actually working. I am not available. And for your follies, whatever your issues are, figure them out, solve them on your own, right? You have to do that, folks. All right. Okay. We'll be issuing the rules on that, Phil, in the trading room again here. Let me see what else we have here for you. We have Okay, let's get on some more questions here. Okay. I do intend to hold an option only for a few minutes. Okay, not a whole day. But if the stock turns completely against me, I don't want to just sell for a loss. And sometimes this happens, right? So then you end up holding. You do have to hold. I don't take losses lightly anymore. So I always build into this contingency that if I do have to hold overnight, I'm okay with that. All right, that's why I do that. So, uh, okay, those two lines you're talking about, Mark, that could be a study. Purple line, that could be a theoretical line on the option. I think it's probably a theory. Okay, let me just go back to this real quick here. I think somebody's. Okay, let me talk about this here for a second. Mark, let me ask you a question here. Is this what you're referring to? Style. If you're talking about the option, okay, he's talking about lines in here, and I'm thinking when you mentioned purple, this is kind of what I thought about right here. Is this what you're referring to here, Mark? This crazy line over here. This is a theoretical price on the options. I'd like to get rid of all of that stuff that I don't need. So what I do there is I go right click, I go to Style, Settings, and I go to Options tab, and I untick the Show Theoretical Price. I get rid of that, click Apply and OK, and it's gone. Okay, and again, I don't want to get too deep into the setups of all of this, but let's get into our 2 minute tutorial. Tonight I'm going to talk about liquidity, folks. Liquidity. This is there's two kinds of liquidity, all right? When you hear the term liquidity in this world, you hear about market liquidity. There's also accounting liquidity. Coming from an accounting background, it has a different meaning to me. Market liquidity is what we're talking about. This concerns the ease of trading an asset itself. Okay, how easy is it to actually trade this? You don't want to buy a roach motel. Remember those little roach motels? The little roach can get in, but it can't get out. That's not what you want with one of these things. You can always buy an option, but doesn't mean you're going to get out of them easily, right? There's also this thing in accounting liquidity. This is something that assesses a company's or an individual's ability to meet their short-term financial obligations if the liquidity is there. We are talking about market liquidity. Market liquidity provides ease with which instruments can be traded without significantly affecting prices. Highly liquid stocks have many buyers, many sellers, so the transactions are quite stable. The prices are transparent. Everybody knows kind of what the prices are. There's no ambiguity in that, right? Illiquid stocks lead to price volatility and difficulties in executing trades. Again, you don't want to get into a roach motel. Low liquidity risks. An investor might be forced to sell an asset at a discount. You don't want to do that. You don't want to struggle to find a buyer or miss out on other opportunities because you're stuck in this thing here. How do you measure liquidity? Well, it's not like there's some number out there, but you're looking at trading volume. High volume suggests high liquidity. The bid-ask spread, this is a very good one, folks. You need a narrow spread that equates to liquidity. When you have huge spreads, we had this last week, I think it was. There's some issue with the Chicago Mercantile Exchange. They had a problem, and there were options and futures were not trading. We had massive bid-ask spreads, and I said, this is not something you want to trade. I just sat on my hands through the whole session. We did not trade. All right. Very important. You want a narrow spread. Market depth. All right. This also, if you have good volume at orders at different price levels to handle large trades without significantly price changes, if you have that open interest and all the volume and other options, not just the at the money, but going deeper in and out of the options, that gives you liquidity. For SPY, I like to have a bid-ask spread if it's a 2 to 3 cent spread. Now, depending on what's going on, and depending on, if the option is valued at $5 or more, roughly around that. And again, this is not cut and dry, um, thing here. Okay, you'll find that's you'll get a feel for it. Okay, but if the option is roughly $4 or $5 or more, then the 3 or 4 cent spread is okay too, because the options are valued higher. So, but you want to kind of keep them as tight as possible. I also look at volume. I don't want to trade anything less than, like, I don't even like 1,000 contracts. But at the bare minimum, an option has to have at least 1,000 contracts, having traded already before I get into this thing, preferably more. I think, and you'll find, you know what, somebody mentioned about zero date expiration. Those options have massive liquidity, and that tells me that many traders are just gamblers, or those are market makers trying to lure you in, which they do a very good job at. Now, you can make a lot of money with zero date expirations, and I will admit sometimes I get into those as well. All right, I'm not going to kid you. I don't do that in front of the group because I don't want to be sound hypocritical. I'll do that after the trading room. If I'm really on a tear and I'm really at one with the market and I understand the risks and I'm not going to go crazy, I may get into some zero date expirations myself. All right. There's a lot of profit to be made on those. But again, be careful on those because once it turns against you, there's almost no getting out of it. All right. So this is the liquidity that I talk about. All right, now I want to get into some other programs that we do. All right, we have some solid gold programs, folks, with learn and earn actionable plans exclusively through our Day Trade Spy. The inner circle, I mentioned this earlier. This is our morning market analysis, which you're going to receive at 9 o'clock. You're also going to get a follow-up report later in the day as to what we actually did. You'll also be invited to our Wednesday night interactive meetups. Can't make it? No sweat. They are recorded for later review and sent to you as soon as the webinar is done. This is actually the first program that I started back in 2010, the Inner Circle. And now we've got the Day Trade Spy Signal for those unable to watch the markets. Maybe you're out there running around in the morning. This is actually a trade that comes 3 to 5 times a week, algorithm based, sent to your email, cell phone, text. The idea here is to buy it immediately, sell for a 5% gain. If not sold by 4 o'clock, sell the next morning. Sell it at the market close. All right. Sometimes this has challenges, but statistically, it has been working extremely well. And you'll find that if you just stay with the program and do it as to the rules, in the long run, you'll do extremely well with the day trade spy signal. Just like with the pick of the day. Sometimes, yes, it has its challenges. This one here, this is a daily pick determined by now. Myself, along with John, we hammer this out early in the morning. All right. And we submit it at 9 o'clock every morning into your inbox. This is a trade designed to be bought at market open. In other words, it's anchored in time. What we're saying is the market goes up and it goes down. And at some point, anchored in time, right at the market open, right? The market is going to go up and it's gonna deliver a 6% gain. At least that's what the intent is here. All right, immediately put up for 6% gain. Usually, it delivers fairly quickly. In fact, very quickly, within a few minutes. This may be held overnight if you want to, okay? If you want to hold it overnight, you can hold this overnight. And those people who are familiar with how we trade, a lot of them will hold that overnight. But according to the rules that we have to follow with the with Eagle and all that, we actually have to have a sale at the end of the day on that. So sometimes that may show up as a loss when in fact we're holding overnight, and yet it turns into a profit the next day. The trading room, again, hosted by myself along with John, interactive, learn and earn, fully narrated. This is where our strategies come to life every morning, 9:20 to 10:30. Best value here, folks. If you know what calls and puts are, you need to be here in this trading room. All right. All of our programs, you will get the best price if you simply contact customer service at daytradespy.com for details on the price. Now, at some point, I hope to have a page that I can simply refer you to that all of the best prices are going to be there. But right now, please contact customer service. Tell them you're interested in this program, this other one, this other one. Give them all 4 programs if you want. Say, what are my best prices on this? They might even come back to you. I don't know how generous they are these days. Maybe with the holiday season, they might be generous and say, hey, we got a package deal for you. All right, you never know. So contact customer service at daytradespy.com for details, and they will get back to you with pricing. All right, some more questions real quick here. I'm using the phone on the screen. All right. Just forward the owner. Thank you for that, Alex. Yes. Okay, that's good. I got Mark's question answer there. Is it wise to use the 15-day expiration? I have found, Michael, so the question is it wise to use the 15-day expiration date? I found it that that's the good balance is so if it's a Monday or Tuesday, then that same Friday's expiration is what I like to use. If it's Wednesday, Thursday, Friday, I like to use the following week's expiration. Okay, the following week's Friday's expiration. So that's what I like to use. And if anything further out, you'll find that that the stock, the option just might not move as much. Okay, you may not get your percentage gain or whatever. It just might not move as quickly, as fast, or whatever. So you kind of want to have that balance in there. All right, I held you enough here, 9-11. We have our contest. What I want you to do, ladies and gentlemen, pick a number between 1 and 100. Put it in the questions box. I'll give you about 30 seconds to do that. Put it in the questions box, and I am going to pull up my random number generator. Random number generator, and we are going to pick a number using my random number generator, if I can find it. It's right here now. I'm going to pull this up, but this is not the number what you see here when it comes up. This is not the number that you're going to pick. Last week it was 98. It is not 98. It is, I'll tell you what it'll be. I'm just going to pull up the number generator right now, but that's not the number here. I'm going to put it over the side so nobody gets confused. All right, give me a number 1 to 100 in the questions box, and I want you to do that in the next 10 seconds or so here, and then we're going to hit the button, and the person who gets the closest will receive uh, Triumphs and Tragedies ebook. Okay, and we'll see. We'll see who the winner is. Okay, we'll see who the winner is. If it's a tie, you both get an ebook. All right. So if it's a tie, you both get the ebook. Okay, triumphs and tragedies. Or if you want tips, tricks, and traps, put the TTT in there, as somebody has already done. All right, we are going to pick the number here. Are you ready? 3, 2, 1. Oh, the number is 96. Wow, 96. The random number is 96. So let's see who came closest to 96. John H is at 73 at the moment. He's the winner. Reggie got 79. He'd be the one closest to it. 79 for Reggie. Okay. Reggie, you get the winner. Okay, Reggie. I thought you got that already. No, let's see. I'm just going to write this down here. Reggie. Okay. Congratulations, Reggie. You came the closest, even though you weren't really close, but 70. I think what happened was everybody got sort of intimidated by the 92, thinking it's got to be lower, right? Anyway, folks, that's it for us. Thank you all for joining us here. Hold on to your browser. The trading room URL will pop up for purchase details on if you want to join the trading room. So we'll see you the next time. The recording will be up on the website probably in a day or two. And been a pleasure, folks. See you next Sunday night.
Sounding loud and clear, and there ain't no stopping now. You're the one, shine brighter than the moon and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You